Assalamu alaikum wa rahmatullahi wa barakatuhu. My dear students, we are at chapter 2, that is sources of corporate finance. In this chapter we have seen sources of owned capital and sources of borrowed capital, which we are going to see today. Okay, in sources of owned capital we are done with equity shares, we are done with preference share capital, we are done with retained earnings. In sources of borrowed capital, today we are going to see acceptance of deposit. In previous lecture we did the features and types of debentures. We have already seen the meaning and the definition for debentures. Today we are going to see the meaning for acceptance of deposits. See, public deposit is an important source of financing short-term requirements of the company. When the company is in need of money for a shorter period of time, company accepts public deposit. Now what is deposit? A deposit is a transaction involving transfer of money to another party for safekeeping. Okay, now you can see here in the picture public deposit is shown as this person is trying to keep it very safe in that vault, right? So yes, to keep it safe, the company or the depositor gives money to the company to keep it safe. Now see, company receives fixed deposits from the public for the period ranging from 6 months to 36 months. See, when it's already said that company accepts public deposits, it's a source of financing for short-term requirements of the company. Short-term requirements 6 months to 36 months. This you are supposed to remember because it's very important from the objective point of view. The company accepts public deposit for the period ranging from 6 months to 36 months, or I can say 6 months to 3 years. Such deposits are called as public deposits. Whenever the company accepts or whenever the company raises capital, short-term finance, for the period of 6 months to 36 months, that amount or that deposits are termed as public deposit. So important point you're supposed to remember is for source of finance, it's a public deposit is nothing but a source of finance for short-term requirements of the company to fulfill the short-term needs of the company, and that short-term is for 6 months to 36 months. Now see, under this method, general public is invited to deposit their saving. The company invites general public to invest their saving in the company for varied period. What do you understand by the word varied period? Varied is nothing but different period of time. See, when the company is trying to ask the general public to deposit their savings, of course in return the company is going to pay certain thing on the investment depositor. The person who's giving money is known as depositor. So yes, the company is going to pay certain thing when the depositor is trying to invest in the company. That return on investment is interest. Interest is paid by companies on such deposits. When the general public deposits certain amount to the company or in the company gives interest on that amount. Okay. Now see, let's take an example. If any XYZ company gives, any XYZ person deposits certain amount in the company and company gives nothing in return. Okay, and when after you can say a year or 1.5 years, when the depositor says give my money back, what is the proof that company has taken the money? So for this proof, the company issues deposit receipt to the depositor. What is deposit receipt? Deposit receipt is nothing but a proof that company has taken a loan in form of public deposit. Okay, on this receipt the important particulars are mentioned, that is company name, company's common seal, the fixed amount or the fixed deposit company has taken from the depositor, date of repayment, rate of interest, and other important, the date, and when the maturity date is. Every particular detail is mentioned in the deposit receipt. See, the terms of deposit are mentioned in the deposit receipt. What do you mean by the terms of deposit? When the company is going to repay the amount, what is the percent of interest company is going to pay? Okay, the deposit receipt is an acknowledgement of debt. Acknowledgement, proof. See, acknowledgement is nothing but a letter confirming receipt of something. When I say acknowledgement of debt of loan by the company, that means company is giving a confirmation that yes, company has taken loan from the depositor and company is going to pay after certain period of time. Deposits are either secured or unsecured loans offered to the company. The public, the general public offers loans. The general public gives loans to the company, and this may be secured or unsecured. We have seen in the types of debentures as secured debentures and unsecured debentures. Likewise, fixed deposits or the public deposits are or can be secured or unsecured. Now see what is the actual meaning which is there in the Companies Act 2013. See, as per section 231 of the Companies Act 2013, deposit includes any receipt of money. What is deposit? Deposit includes, deposit is nothing but any receipt of money that company has taken by way of deposit or loan or in any other form by the company. Deposit is nothing but whenever the company accepts money from general public, it is nothing but a deposit or a loan by the company, but does not include such categories of amount as may be prescribed in consultation with the Reserve Bank of India. Now this is what we are going to study further in detail. See, whatever the company receives, whatever amount in whatever form the company receives will be termed as deposit, but there are certain conditions where the acceptance of money will not be termed as deposit, which we are going to see. Now see, deposit includes any receipt of money by way of deposit or loan or in any other form by the company, but does not include such categories. These such categories we are going to see further of amount as may be prescribed in consultation with the Reserve Bank of India. Now see, the above expression or the above definition has been further elaborated by Rule 2(1)(c) of Companies Act in the Acceptance of Deposit Rules 2014. Now see, when we are seeing these such categories are defined in this rule too. See, this rule provides that deposit means any receipt of money in the form of deposit or loan by the company. However, deposit does not include the following. Now there are certain acceptance of money, but those acceptance are not termed as deposit. Those following which doesn't includes deposit we are going to see further. See, the very first point, any amount received from central government or state government. When in any of the conditions when the state government or the central government gives any amount to the company, that amount will not be considered as deposit. Okay, that amount will not be considered as deposit. This is the very first exception under the term deposit. Any amount received from central government or a state government. Second point here is any amount received as loan from any banking company. Now, when the company takes loan from the bank, that loan will not come under deposit. Okay, now you have see here in this example you can see the different logos and names of the bank. You have got Union Bank, Axis Bank, IDBI Bank. Let's say the XYZ company has taken a loan from Axis Bank. This loan will not come under deposit. Okay, this is the other second exception. Any amount received as loan from any banking company. The third point you have got is any amount received from foreign government or international bank. Till now we have seen in the first point that any amount received from state government or central government. First point. Second point, any amount received in the form of loan from the bank. Now the third point is mixture of both. Any amount received from foreign government or international bank. Okay, let's say the company is here established in India, but the any other country's government is going to give some money to the company, that amount will not come under deposit. Secondly, any international bank, Citibank, Standard Chartered, these are the international banks. If the company is here in India and as in this example, if any one of the banks gives certain amount to the company, that amount will not come under deposit. This was the third exception. Coming to the fourth exception, any amount received by a company from any other company. Let's say there is an XYZ company, okay, there is any XYZ company has received certain amount from another company, even that amount will not come under deposit. Now you can see here in the example, let's say Cadbury company has got or received some amount from Nestle company. Okay, so yes, I can say that this amount will not come under deposit. The fifth point here, now see here, this is very important. Any amount raised, now to raise amount is to generate or to receive. Any amount raised by issuing commercial paper. Now what is commercial paper? See, this is not there in the textbook. All you are supposed to remember is only the main highlighted important points. This commercial paper you are not supposed to explain. This is just for your understanding. What is commercial paper? Commercial paper, also called as CP, is a short-term debt instrument. Short-term debt instrument issued by companies to raise funds, generally for a period up to 1 year. When the company requires amount for lesser than a period of 1 year, at that time company raises funds, company generate funds and give a commercial paper. A commercial paper is nothing but a paper giving an assurance, a paper giving proof under the company's name with the common seal that the company is going to raise some money. See, it is an unsecured money market instrument issued in the form of promissory note. The company promises to pay the amount. This was first introduced in India in 1990. This is all what you are not supposed to remember. Just you are supposed to remember is any amount raised by issuing commercial paper. Commercial paper, when you take some money or when you raise some funds and you give commercial paper instead of deposit receipt, at that time this will not come under deposit. The sixth point you have got is any amount raised by issue of bonds. When the company issues bonds, this is the next topic, bonds, in the sources of borrowed capital, which we are going to see in the very next lecture. Right now you are supposed to remember is any amount raised by issue of bonds. Now what is bond? A bond is referred to as fixed income instrument, or that is securities, as an investor knows the amount of cash he or she would get back when they hold it until maturity. Bonds traditionally paid a fixed interest rate coupon to the debt holders. Right now what you are supposed to remember is any amount raised by the issue of bonds. Okay, deposits, acceptance of money when it comes to public deposit. Public deposit is something else and bonds are something else, which we are going to see. So you are supposed to remember any amount raised by issue of bonds will not come under deposits. Seventh one you have got as any amount received in trust. Okay, what do you mean by in trust? See, in trust means the company receiving and holding the amount is acting as trustee or custodian and not appropriating the money for its use. When a company receives money in trust, there is no obligation on the company to pay interest on the same. See, this is not the investment the other person is doing. The company is acting as a trustee to the amount. What company will do? Company will try to keep this amount safe, though the company will utilize the amount, but at the end company is going to pay only the actual amount rather than interest on the same. See, if something valuable is kept in trust, it is held and protected by a group of people or an organization on behalf of other people. Okay, just when the company is trying to act as a trustee, it means that any amount received in trust to keep it safe. On this amount, company doesn't pay interest. When the company is not going to pay interest, it will not come under the head deposits. Okay. The 8th point you have got as any amount received by way of subscription to any shares or debentures. Subscription amount, this we are going to study in detail when we are going to do chapter number 5. Right now you are supposed to understand this. See, in 11th standard we are done with the topic prospectus. What is prospectus? When the company wants to raise capital, right, the company issues prospectus. Company invites general public to invest in the company. Now see, a prospectus is any document issued including any notice, circular, advertisement for what? Inviting offers for the public for the subscription or purchase of shares. The initial amount when the company wants to raise capital through shares. Okay, so company is going to issue prospectus in the market. At that time there would be people who want to invest in the shares. So at that time these people who wants to invest will give certain small amount to keep those shares under their name. This is what comes under subscription. So when the company receives subscription to any of the shares or debentures, this amount will not come under the term deposits. Okay, so these are the 8 conditions which does, if company receives amount in these forms, this will not come under deposit. What is the first one? Any amount received from central government or a state government. Any amount received as loan from any banking company. Third is the mixture of both. Any amount received from foreign government or international bank. Fourth one is any amount received by a company from any other company. Any amount raised by issuing commercial paper. Sixth one is any amount raised by issue of bonds. Seventh, any amount received in trust. Eighth one, any amount received by way of subscription to any shares or debentures. See, terms and conditions of acceptance of deposits are discussed in detail in chapter number 5. With this, we come to an end with the today's lecture, and the assignment is here. There is only just one question. What is public deposit? Okay, the most important point you are supposed to remember is when the company wants to raise fund for a shorter period of time, that is 6 months to 36 months, that acceptance of money is termed as public deposits. Yes students, that's all for today. Thank you.